things are going relatively well early in the year, particularly compared to some of the disappointing data last year. But remember, their goal is not to rocket GDP skyward. They're not trying to hit some high figure. They probably aren't even trying to hit the GDP growth target this year. What they're trying to do is establish some stability, some upward momentum, bring back a little bit of consumer confidence, which have been crushed for the last several years. If they can do that, then this year will be a success, even if they miss the GDP growth target.
Leland, dollar yuan sold off this week. It's rallied a bit, but I mean, it's now down 1.7% this year. I think 12.9% since 2021. It's been down in each of the last 2 years. We have claims of outright fraud at China Evergrande. Now, I think China Bank of Communication, they're trying to go after Shimeo. Talk to us about the property sector. Talk to us about Chinese deflation. What is going on there, and how can investors take advantage?
Well, first point is deflation. Everyone's been talking about Chinese deflation. China is not in broad deflation. There's been a close calls at the end of last year. There is deflationary pressure, but there is not broad deflation in China. You're still seeing gains, even though they've been much slower than everywhere else in the world. So, that's a reflection of the fact that Chinese economy hasn't been doing particularly well. So you've got problems there, but you don't yet have this, deflationary wave that's being exported out like a lot of people are claiming. Property is interesting because it was a disaster last year. It's not going to be great anytime soon, but they have stabilized it in the first quarter. And I think the most important thing to take into consideration when you're talking about property is this is not a 1 year, 2 year, 3 year battle. This is a decade plus long battle. And what they need to do is essentially make sure that they're, lessening the impact of property as a growth driver. They want to take it down from 25% of the economy or so down to much, much lower. But at the same time, not do it so precipitously that they shock the rest of the economy, that they send it into a doom loop of confidence. This is really, really tough to do. So they're being, they're tightening credit. And then when things get bad and cash flow freezes up, contagion is threatened, then they step in and ease conditions a little bit. Then they start over. So this is a long cycle, and it's a really difficult one.
Leland, President Xi hosted business execs out of the U.S., C-suite executives just last week, trying to entice them, tell them, hey, China's open for business. Then just today, China's telling telco carriers to phase out the use of foreign chips, Intel, AMD. What should we believe here? I mean, is China really open for business from the perspective of a foreign investor?
No, of course not. Always watch what they do, not what they say. We joke about that on the stimulus front. They talk about stimulus every day of the week, but they're not stimulating in a big way. So this, it's the same thing applies to foreign investment. 2023 was the year of foreign investment in China. And how did they celebrate it? By cracking down on foreign businesses, by shutting down external data sources, by shutting down internal data sources. This is the incoherence that characterizes China policy these days.
Leland, Damian and I, we like to talk. We went to China. We're experts on China. We go to the Mandarin in Hong Kong. We go to the Peace Hotel in Shanghai, sometimes the St. Regis in Beijing, and we say we went deep into China. Leland Miller, what's China's consumer like right now away from the madness of global Wall Street going to 3 zip codes in mainland China?
That's exactly the right way to characterize it. Cyclically, March, the first quarter looked better than it has been for a while. We were seeing retail pick up, services pick up. So cyclically speaking, the consumer was better off in the first quarter, spent more than they had in a long time. So it's bullish cyclically. But the most important backdrop is always the structural backdrop. There is no consumer wave. There is no consumption push. There is no shift from investment to consumption happening in China because the Chinese economic model disincentivizes households. It disincentivizes consumer spending. So you're not going to see any big time shift. Structurally speaking, China's slowing down massively. There's enormous pressure on consumption. But look, cyclically speaking, we had a nice month in March and we had a solid first quarter.